Hey there, and welcome back to Coffee with Kim. I was gonna introduce you to my friend. This is Ryan Sanford with Lamar National Bank, and I wanted him to come today so that we could talk about some different options as far as lending. Welcome.
Thanks for having me.
Yeah, thanks for being here. So the first thing I wanted to ask you is what you're seeing as far as interest rates and things like that in the current market and things that buyers are having to deal with right now.
Sure. Yeah, it's a very interesting time in the market. We just had a rate cut a month ago,
Yes.
and I believe they meet next week again, the Fed, to discuss another rate cut.
Okay.
As far as what that looks like, we kind of don't know. It's anybody's guess at this point. Nearly positive it's going to be a cut. Could be 25 basis points, 50 basis points. We don't, like I said, we don't know. But what that means for buyers is that there's an opportunity to save a little money on your monthly payments coming up,
All right.
get a little extra buying power, be able to spend a little more, which is great for the real estate market as a whole. I think there's been a lot of people sitting on the sidelines that are waiting.
Right.
A lot of pent up demand. So
Right.
hopefully those cuts that keep coming throughout the next 12 or 18 months really get people back into the market and buying demand really kicks back in.
Yes, that'll be super exciting. Okay, so then you have some exciting products as far as things that buyers can do to help them have more buying power as they go into this market and being able to negotiate.
Right.
Tell me about those.
Sure, yeah. So one of our most exciting products is an owner finance product. And what that allows is for a buyer to purchase a property without having to go through a traditional mortgage company or a bank.
Yeah.
It is the seller providing financing, and so you can get some creative terms. You can get some interest-only periods, whereas a traditional mortgage, usually you don't hear interest-only. You can also get some lower interest rates, just depending on what the seller is looking for.
Right.
Also lower down payments. So
Right.
most banks require 20% or so on a purchase. Seller might be able to take 5, 10%.
Right. Okay.
And so the product I have, it allows these sellers to provide that financing to buyers without having to worry about finding an attorney or worry about servicing the loan in general. I handle all of that entire process.
Okay. Tell me what that means. You handle all that. So what would it look like if I had a buyer and we went to closing, we closed, and you had the owner finance? So before and after closing, what things would you do on that?
Yeah. So I'm very flexible. If the owner says, here's the terms I want to offer, we go with that. I can document anything. When I say anything, I mean anything. So you say, hey, I want to offer this 30-year loan to this person to buy this house at 8%, 7%, 6%, whatever it is. And here's the fees I want to charge them.
Right.
What we do is we take that, we document it, we charge a small fee that gets passed on to the buyer, so no cost to the seller at all. And then we charge a small interest rate scrape. So if you say, I want my return to be 7%, we would charge just a little bit more than that to the buyer.
Right.
And that's the cost for providing loan statements and the ongoing monitoring and servicing of the
Okay.
So it's really as easy as that.
That's awesome.
Yes. And so once you give me that information, I know who the buyer is, I document it, we close, the funding happens, the realtors get paid.
Right.
So sometimes realtors get a little confused that are concerned that maybe they get cut
They
out
get
in an
cut
owner
out,
finance
yeah,
deal,
no.
and that's not the case. So and then at the end of the day, it's closed and ongoing. I collect the payments, and it works like mailbox money. It shows up in the seller's account every month. If that's how they structure the payments. And they can then, from that point,
So do you pull credit scores in the
only if
beginning?
the seller wants us
Only
to.
if the seller wants them.
Yes.
Okay.
So we don't have to do an appraisal. Don't have to do any kind of credit scores or underwriting. All the due diligence is up to the seller.
Okay. So then if let's say we structured one and it had, whatever, 5 years and then a balloon payment, then what would happen with that balloon payment? Would they refinance through you, or would they find a traditional lender to refinance through?
Yeah.
Would you refer them out?
That's a great question.
Yeah.
It could be a plethora of things. The seller can renew the loan themselves if
Yes.
it's been a good relationship. They can do another 5 years or 10 years or however long.
And you would handle that?
Right, we would
Okay.
handle the whole documentation of it. Yeah, exactly. And so we can do that, or the average life of a mortgage is somewhere between 5 and 8 years. So typically, what happens is they get refinanced anyway. So if a refinance happens, that's usually how a seller gets out of a loan too. They get
Right.
paid off. But additionally, they could just say, let's say someone has been kind of hard to work with for whatever reason, slow pay or whatever, and the seller doesn't want to continue that relationship. You come to that balloon, there hasn't been a reason to foreclose, let's say.
Right.
You come to that balloon, they can say, we don't want to renew this loan. You need to go find someone to pay us off as well. And so that's when a refinance can kick in.
Okay.
Yes. So the seller has quite a few options that they can
Okay.
go with. And there are options for even the bank to take out the loan too. That would require going through like a mortgage refinance process, and you go through the whole underwriting, and
Appraisals and everything.
Yeah.
You would have to actually go through the whole thing.
Right, you have to go through the whole
Okay.
process.
Wow, what a great product.
Yes, yeah, it's exciting.
Yeah. Okay, well, good. Do you have any other advice for buyers right now that you'd like to mention?
For buyers, I would say don't let a quarter point keep you out of buying a good deal. Property is property. It's not going anywhere.
Yeah.
Interest rates change all the time. And if a quarter point's going to make or break a deal, probably too skinny anyway. So don't be afraid to buy now.
That's
And-
great advice.
Yeah.
That's great advice. So, okay. Well,
Great.
thank you. Thank you
Yes,
for coming
thanks
and
for having
talking
me.
to us today.
Thank you.
All right. Till next time.